What's the trend for Microsoft, gold miners, and Exxon Mobil? If that's what you're interested in, then keep on watching. Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Let's start with Microsoft. On 15 January, I talked about this upward trend. There's an all-time high here and a higher all-time high here, and that there was bearish divergence in price, which to me meant that price would fail. Let's see how my prediction went. Here's the 22 January view of Microsoft. You can see very obviously that my thesis for the past few weeks has been negated. The positive price action here with negative RSI, which is a divergence here, it ended at this point right here. So on the past few candles here, this is volume. Right here, the RSI down here coincides with this price action up here, which is converging. It's behaving in the same way, and by doing that, it negates the prior thesis of a bearish move on price. Okay, so I think the next move for Microsoft will be up here to hit this trend line resistance here, anywhere around the 409, 410 range. And we'll have to reassess. This is a long-term trend line. I'm going to switch back here so you can see it. It goes back quite a ways to last year, June, and even before that. And because of that, it will prove to be resistance. And we'll have to see. We'll have to see how the RSI indicator behaves correlating with price. Okay? So my thesis going forward is that it will test this resistance zone. That's Microsoft. Switching to gold miners. Let me zoom in here. This is a little bit hard to see from 15 January. 15 January, price action here, wicked. This really nice wicking candle here. Price essentially opened up, almost touched this trend line here, and the 200-day as well. Sold down during the day and closed underneath. And my thesis at the time on 15 January was price would continue to go down. So let's see how I did. Fast forward to today, 22 January. You could see that price did sell down a lot. Okay, so the candle here on 15, the next subsequent days, price sold down a lot down here. And what we can see here is this trend line that is providing support, and RSI is beginning at the very slightest having bullish divergence. Let me zoom in here to show you. Okay, price here is going downward, and right here momentum is going upward a little bit. This doesn't mean right away that you would take this as a long. Well, not yet. I think tomorrow it'll still putz around, maybe go down a little bit, but this little bit of divergence is telling me that price for GDX wants to go up and retest the entry for this gap. Okay, so remember, there's this big gap down and sell down, and subsequent days it flagged. Okay, but now it's beginning to build a little bit of a support down here. Now my thesis remains the same, right? I'm wanting to take an entry down here, further down. I don't think gold is done with this downward move, but this short-term upcoming move for this week likely will be a gap fill, maybe a gap entry, right? Fake us out a little bit and then sell down, or it'll be a gap fill. Okay, so over the next few days, bounce around, come up, fill the gap probably on the hourly, and then get rejected and sell down some more. Okay, so overall thesis remains bearish, but I think in the very near term this week, there will be some upward price movement, enter the gap, perhaps fill it before it sells down again. I'm still bullish for gold down here. All right, that's GDX. Switching over to Exxon Mobil, on 15 January, I said Exxon Mobil was in this flagging pattern and that it would continue to go down all the way down to this 84. Okay, so 15 January, it retested resistance here at around 150 cents was resistance. And let's see how I did. So you're switching over, yep, 22 January. You could see that price continued to sell down and now is in this little flagging pattern here. Now what I do see is that I'm beginning to see quite a bit of bullish divergence. You can see that if you compare this point here and this point here, it's very obviously downward. Whereas the same point time frame here to here is upward. Okay, so that is divergence. Okay, so because of the divergence on the bullish side, I think what's going to happen is, and it's quite a bit of divergence since the middle or end of December, middle of December to now. I think it'll be a decent move. So from I think, my thesis, it has to change because the price action in RSI is telling me that there's a change. I think what's going to happen is price is going to eventually fill this gap that starts here. Okay, it'll come in, fill it, may come down, hit this trend line, and then come back up here to retest the 100. So ultimately, in the next week and a half, I think it's going to come up, right, or bounce around, and then eventually come up, retest the 100, and then we'll reassess. Okay, so my thesis back here was price would keep going down, 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 perhaps 9% down discount here, 9% discount, but this bullish divergence is telling me it's probably going to take an upward move for ExxonMobil. Now, would I take a long here? I'm not. I wouldn't, because you can see it's kind of dangling between this resistance and this support. And so when it's in the middle, it's not an objective, safe play to go either up to take a long or a short. Well, let's just wait. Wait to see what happens. Okay? So for ExxonMobil, short term, next week or so, hit this. And probably we'll have to decide which way it goes after that. All right, that's ExxonMobil. Hey, I'd like to give a quick shout out to my subscribers. Today I hit 50. Woohoo! 50 for me is a big deal because it's a nice even number showing a milestone. And I really appreciate that you're watching and sharing my content with friends. Please remember to give it a thumbs up and subscribe if you haven't yet. And as always, my content is for educational purposes only. It's not investment advice. And as always, good luck with your trades.